We're seeing some pretty alarming signs that point towards a potential economic collapse, and you do not want to be caught off guard when it hits. That's why in this video, we're diving deep into 11 red flags that suggest the U.S. economy might be on the brink of collapse. We'll be covering everything from the housing market to the stock market and everything in between. It's time to separate hype from reality and understand the real risks we're facing. Let's talk about the housing market. Now, you all know real estate is usually a pretty good indicator of how the economy is doing overall. And right now, things aren't looking so hot. We're seeing a pretty significant drop in home sales, which is a major red flag. Just a few months ago, houses were flying off the market. People were getting into bidding wars, offering way over asking price and practically begging to get their foot in the door. But now, crickets. Buyers are disappearing. Why is this happening? Well, a few reasons. First off, interest rates have skyrocketed. Remember those super low rates we had during the pandemic? Yeah, those days are long gone. Higher interest rates mean higher mortgage payments, and let's be real, most people are already stretched thin as it is. On top of that, prices are still really high in many areas. So you've got this double whammy of high prices and high interest rates, which is making it almost impossible for many people to afford a home. This slowdown in the housing market has a ripple effect on the entire economy. Next up, let's talk about another major industry that's feeling the heat, the auto industry. Remember when you couldn't find a new car to save your life? Dealerships were practically empty because of supply chain issues, and people were paying way above sticker price just to get behind the wheel. Well, those days are over. Auto sales are plummeting. See, just like with housing, those crazy high interest rates are hitting car buyers hard. Financing a new car has become incredibly expensive, and most people just can't swing it. And it's not just new cars either. Used car prices, which were through the roof not too long ago, are finally starting to come down, but not fast enough to offset those interest rates. This slowdown in auto sales is a clear sign that people are feeling the pinch and cutting back on big purchases. Now let's talk about something that's been happening for a while now but seems to be getting worse, the retail apocalypse. Remember all those empty storefronts you see at the mall? Yeah, that's not a good sign. We're seeing more and more retail stores closing their doors, and many of them are filing for bankruptcy. The rise of online shopping definitely played a role in this, but the current economic climate is accelerating the trend. People simply aren't spending as much money as they used to, and when they do spend, they're being more cautious about where they're spending it. This is hitting everything from clothing stores to electronics retailers, and it's not just the big chains that are struggling either. The incredible shrinking middle class. Now let's talk about something that's really concerning: the shrinking middle class. For decades, the middle class was the backbone of the American economy. But over the past few years, we've seen a disturbing trend. The middle class is shrinking, and the gap between the rich and the poor is widening. Wages have stagnated for years, while the cost of living, especially housing, healthcare, and education, has continued to rise. This means that more and more people are finding it harder to make ends meet, let alone get ahead. They're struggling to pay their bills, save for retirement, or even afford basic necessities. And this isn't just a problem for individuals and families, it's a problem for the entire economy. When the middle class shrinks, so does consumer spending, which is a major driver of economic growth. And here's the thing, a strong middle class is essential for a healthy economy. Economic optimism evaporates. Remember all that talk about a booming economy? Well, it seems like people are starting to lose faith. Consumer confidence, which measures how optimistic people feel about the economy, has been on a steady decline. And it's not just consumers who are feeling uneasy. Business confidence is also waning as companies become increasingly uncertain about the future. They're hesitant to invest, hire new employees, or expand their operations. This lack of confidence is a major red flag. When people and businesses lose faith in the economy, it can become a self-fulfilling prophecy. They pull back on spending, investments dry up, and the economy slows down even further. Stock market crash headlines dominate. Now let's talk about something that's been all over the news lately, the stock market. If you've been paying attention to the headlines, you've probably seen a lot of talk about a potential stock market crash. And it's not just doom and gloom prophets sounding the alarm. Even some of the most respected financial experts are warning that the market is overdue for a correction. Now, I know what you're thinking. Graham, you always say you're not a financial advisor. And you're right, I'm not. But I am someone who pays attention to trends, and right now the trend is not looking good. The upward economic trajectory is gone. Remember all that talk about a V-shaped recovery after the pandemic? Yeah, that didn't quite pan out as planned. The economic growth we experienced in the past couple of years has stalled, and in some cases, we're actually seeing a reversal of those gains. The combination of rising inflation, higher interest rates, and geopolitical uncertainty has created a perfect storm that's putting the brakes on economic growth. And while some economists are still holding out hope for a soft landing, others are warning that a recession is inevitable. Think about it. The economy is like a giant ship. It takes a lot of momentum to get it moving in the right direction. Wall Street's feverish race for the exits. Okay, picture this. You're at a crowded party and suddenly someone yells, "Fire!" What do you think happens next? That's right, everyone rushes for the exits. Something similar is happening on Wall Street right now. Investors are getting increasingly nervous about the state of the economy, and they're starting to pull their money out of the stock market. This mass exodus is creating a domino effect as selling begets more selling and the market spirals downward. Think of it like a game of musical chairs. As long as the music is playing, everyone's happy. Now, I want to be clear, I'm not saying that the stock market is going to crash tomorrow, but I am saying that it's important to be prepared for the possibility. As the old saying goes, hope for the best, but prepare for the worst. One of the things that's important to remember about the stock market is that it tends to go down much faster than it goes up. We saw this during the dot-com bubble in the late 1990s and again during the financial crisis in 2008. When panic sets in, investors can dump their stocks en masse, leading to a rapid and steep decline in the market. While the stock market can be a good indicator of the overall health of the economy, it's important to remember that it's not the economy. The real economy is made up of things like jobs, businesses, and consumer spending. And unfortunately, the real economy can fall apart much faster than most people realize. Think about it. During the financial crisis in 2008, the stock market crashed in a matter of weeks, but the effects of that crash were felt for years. It was a devastating time for many Americans, and it's a stark reminder of just how quickly things can unravel. Speaking of jobs, one of the most concerning aspects of a potential economic collapse is the possibility of mass job losses. When the economy contracts, businesses are forced to make tough decisions, and often that means laying off employees. During the financial crisis in 2008, we saw millions of Americans lose their jobs, and many of those jobs never came back. Companies across a wide range of industries are already announcing layoffs, and some experts are predicting that this is just the beginning. If the economy does indeed slip into a recession, it's highly likely that we'll see a significant spike in unemployment. I know this might seem like a lot of doom and gloom, but I want to emphasize that I'm not trying to scare you. My goal is to make sure you're informed and prepared. The truth is, we don't know for sure what's going to happen with the economy. And in times of uncertainty, it's always better to be safe than sorry. That means taking steps to protect your finances, like paying down debt, building up your emergency fund, and diversifying your investments. Remember, knowledge is power, and the more you know, the better equipped you'll be to weather any storm. Thanks for watching, and don't forget to hit that subscribe button for more videos.